I'm Scott Starratt with Starratt Wealth Management. Well, May was pretty well a continuation of what we've seen for the last 6 months. April was a little bit flat for most client portfolios, quite weak for the market overall. May, on the other hand, was strong for the market and strong for client portfolios. One of the reasons for that is we did see a continuation of the AI theme that's been driving markets higher over the last little bit. And we've also seen the last few months a real broadening out of the market. What I mean by that is that for the last 18 months before that, primarily it was these big tech companies, whether you call it the Magnificent 7, 6, 5, and I've spoken about this before, that they have really driven the market higher. Now we're starting to see more companies driving the market higher. There is still a disconnect between large mega companies and small or mid-sized companies. We feel that that will be narrowed over the coming months, and that's one of the reasons why we do have a little bit more money exposed to that area. But for the most part, we are optimistic for the rest of the year. We do think there will be volatility, but we are prepared for that volatility. The other thing that is really driving things higher or lower, depending on the day, is the interest rate outlook. We continue to get messaging from Canada and Europe that they are looking to cut interest rates. In Canada, a cut may come as early as tomorrow. In the case of the US, they're messaging that might be a little bit later in the year because they do have some higher than expected inflation, and growth in the US continues to be quite strong, primarily led by not a lot of people out of work in the US by percentage. So really that's still up in the air as to what happens there. We'll also, towards the fall, get into election season in the US, so that might cause some volatility. Down the road, I'll probably do an interview with one of our friends out of AGF, who I've interviewed before, to kind of talk about the US election, but I'll wait until after the summer when it's a little bit more timely for that. The other thing you'll see coming from me here in the next probably couple of weeks is every year we end up doing an analysis on our models. We use an independent third party to go through the models to identify where there's some risks that we can't necessarily see. We also look at how those models compare to other models that are out there in that other advisors use. And so I just went through the drafts today, and I hope to have the final copy here in the next couple of weeks, and I'll probably do a video on that. Other than that, again, we continue to see client portfolios being quite conservative. We have been building a little bit of cash in portfolios, and we look to either deploy that into some really good interest rate generating investments, or holding it to allow for flexibility in case we do have volatility throughout the rest of the year. As far as the team update goes, we did lose one member of the team last month. Rimshaw left. We do have a replacement for Rimshaw, hopefully joining here towards the end of June. He's now going through his final due diligence checks, but we hope to make an announcement there by the time I do the next video in another month. Other than that, everything is continuing to be very strong as far as portfolios go, as far as team service goes. And again, we continue to look forward to talking to any colleagues or families that you might have that are interested in a second opinion on their investments. Finally, we are here all summer for the most part to chat. So if there is anything that does come up from your end, please do reach out. Let us know how we can be of assistance, whether that's myself, Jim, Angela, or the new person, which again, I'll announce via email or will announce in this video very soon.